Hello, everyone. Thank you for tuning in to today's discussion. In the next 40 minutes or so, we'll be talking about an important topic that concerns not only all of us in North America, but also beyond. And I would call it part of our raison d'etre, if you will. So let's take a step back and look at where we are today. The annual inflation rate, something that a lot of people are talking about. It's about 8.5% last I checked for the 12 months ending March of 2022. It's the highest since December 1981. Now, between rising gas prices, which I'm sure a lot of us feel, the inflation, and the pandemic, things have not been easy for many of us. In a recent study, 47% of low-income consumers reported not feeling financially healthy. Now, we wonder why. People need help. We need help figuring out where the money is going. We need help figuring out how to reduce the debts, credit card debt and student loan debt and what have you. We also need help figuring out how we can spend less and hopefully move closer to the goal that we all have. But the question is, where can we turn to? So joining us today in the discussion, we have David Reiling, Chairman and CEO of Sunrise Banks, Dana Wilson, CEO and founder of CHIP, as well as Michael Haney, Head of Digital Core of Technisys. So now let's give our panelists a few minutes to introduce themselves. David, let's go with you first.
Well, thanks, Theo, and greetings to my fellow panelists as well and the audience out there. My name is David Reiling. I am the CEO and Chairman of Sunrise Banks. Sunrise is a 20-year certified CDFI, a Community Development Financial Institution. That just means 60% of our loans kind of year in and year out go to low to moderate income people and places. We're also a certified B Corp. So if you want to take that social impact piece, throw on the environment as well as still remaining a safe and sound institution, you get a triple bottom line. And so that really defines what a B Corp is. And lastly, for you bankers out there, the Community Reinvestment Act. So we have been an outstanding rating in CRA for 25 years. So if you have to boil all that down, we're really, we're a tree hugger and a do-gooder bank, and that's what we do for a living. Really, it's kind of a social enterprise that happens to be a bank. So. But in banker terms, we are 1.7 billion or so in assets. We are headquartered in Minneapolis and St. Paul in Minnesota in the United States. And yes, if you're thinking about it, George Floyd and the events surrounding it, that is where we live and thrive and survive, and that's our backyard. So a lot of work to do here in the Twin Cities in Minnesota. And finally, Sunrise has a twofold business model. So we are intensely focused on our local community in terms of community and economic development. And then we're also passionate about scaling financial wellness. And what that means for us is we partner with financial technology companies that want to do good, which we call Fintech for Good. And again, it's all around scaling positive impact for consumers nationwide. Theo, I'll pass it back to you.
Thank you, David. And for those of you who don't know, whenever I talk about banks and I talk about banks that are doing good, yes, they can, I always use David Sunrise Banks as an example. So voila, thank you so much for joining us today. And next we have Dana.
Absolutely, and pleasure to be here with you all today. And of course, I echo what David said about being here with all of you panelists and everyone who is also watching. My name is Dana Wilson, and I'm the CEO and founder of CHIP. Yes, it's like potato chip, but it stands for Changing How Individuals Prosper. And our goal is to make it easier for consumers to find Black and Latinx financial professionals. We really want to create dynamic visibility within the financial landscape and making sure that financial professionals of color are seen and heard, and the same thing with consumers as well. We know that we have a ton of work to do when it comes to closing the racial wealth gap, and we're really hoping that CHIP is poised to be the leader in helping to do so as well, along with a lot of other companies working towards that same mission as well. But at CHIP, we're super excited for all the potential and opportunity for us to continue to grow. So we're hoping that you'll continue to check us out, and it's a pleasure to be here.
Thank you, Dana. And last but not least, we have Mike.
Hi, everyone. It's great to be here with you all. I'm Michael Haney, and I run the core banking business line here at Technisys, which I'm excited to say is now part of the SoFi Technologies family of companies. As you know, SoFi's mission is to help people reach the financial independence they need to realize their ambitions. And they do this in primarily two ways. First, with their direct-to-consumer brands, such as SoFi Bank, and secondly, with subsidiaries like Galileo and Technisys, of which I'm a part, and we provide the technology solutions to other brands, many of whom have a similar mission to SoFi. A great example of this is Chime, whose goal is to make financial peace of mind a reality for everyone. And at Technisys, we have committed to supporting the American Banker Association and CFE Fund's Bank On goal, which is ensuring that our technology enables banks to provide everyone access to a safe and affordable account. And I'm really looking forward to our discussion today.
Thank you, Mike. So let's start with this. It's a warm-up question. What are some of the challenges that you see in our broader economy today? And specifically, how would you define financial wellness? So Mike, let's start with you.
Well, you've already mentioned one of the biggest ones, which is inflation. Inflation disproportionately impacts lower income households, and we are not seeing yet that earnings rise proportionately to the increased cost of living that they're facing. Now, the hardest hit category is fuel and transportation, ranging somewhere between a 25 to 50% increase over last year. Now, we know America is a very dependent nation on cars just to get around, so this one really hurts the wallet hard. And there are many factors ranging from the war in Ukraine and also the readjusting supply chains post-pandemic. And this also has a spill-on effect, right, to tangential industries, car rental markets, the price of used vehicles, the cost of tires and other auto parts and equipment. So when the transportation industry hurts, it affects this sort of just-in-time world we've grown accustomed to. It drives up the cost of everything from household goods to foods, and all of which we now expect to be delivered to us in an instant. So of course, transportation is a big component of that. So now, given this backdrop, financial wellness is more important than ever. And banks have historically not been focused on financial health. They've always struggled to profit from the segments that may not hold high balances. So that tends to steer them towards the wealthy. This is partly due to the high cost per account of their traditional business models, which are based on expensive physical branches, expensive technologies, and dependency on human labor. Nothing is more expensive than human labor. And they've really focused on what I call selling products and processing transactions, not really providing advice or guidance and education so that their constituents can reach a level of financial literacy. Now, I think the good news is we've made a lot of progress in the industry around things like access and fairness, but we have a long way to go to make banking both simple and automated. And this last part is critical because people don't like to think about money. It's not fun. It's perceived as complex and tedious, and they'd really prefer to be spending their time on something else.
I agree with you. It reminds me of how we think about retirement too. It's another thing, right? It feels so far away, and it's not a pleasant thing to think about, especially when you know that you're short and you know you need to make up for it. So with that being said, Dana, what are your thoughts?
Yeah, absolutely. And I'll kind of start from there too. You mentioned the word retirement, and my background has been in wealth management. I run my own investment practice. And the one thing that I used to talk a lot about with my clients was just kind of getting rid of the notion of retirement. I don't think a lot of us kind of function or run our daily lives in the mode of, hey, what am I going to do when I retire? It's more of what am I going to do when I have to plan for those financial shifts in my life, and what does that actually look like? You know, retirement might just be someone, you know, leaving their corporate position to maybe start their business or finally start that startup or kind of, you know, do whatever that next phase of life is. So how do we plan for those phases? I think, you know, when we're talking about the broader economy, you know, a lot of it can be information overload, right? There's so much information out there about what to do, how to think about your money, that it just becomes almost overwhelming. Even trying to integrate and figure out what type of technologies we should be using, right? Everyone's like, oh, did you see this app? Did you use this? Did you use this? this, and you kind of feel overwhelmed and also ashamed or just embarrassed if you don't know about or haven't utilized it, or more so don't even know how to utilize it. So there's a lot of information, a lot of technology, a lot of which has sparked a lot of good conversation for a lot of people, because Mike said, right, we don't always look at financial wellness. That's not always top of mind. During COVID and still kind of sort of going through COVID, it was all about self-care. How are you taking care of yourself? And deepening that with all of the tools that kind of walk into what a financial wellness journey can be also, as we look at the Great Resignation and everything that came from people really reevaluating their circumstances in their lives and actually not necessarily planning for retirement, but taking a minute to say, hey, what's important to me? What do I like to do when I get up in the morning? What does that next month look like? Do I really want to stay in the position? And how do I line up my finances to look the way I want them to, so I can make that move where it actually is realistic, knowing all the things that I want to do. So when I think about what financial wellness means, it's about feeling secure. It's about feeling empowered. It's about looking at your money journey, and maybe you made some mistakes along the road, and maybe there's some things that can be adjusted, but it's taking ownership of that so that you can start to move on in a more positive and reflective manner.
I can't agree more. It reminds me of a saying that it's a means to an end, right? At the end of the day, where do you want to be, and how, as an industry, can we help them get there? And so last but not least, David, your thoughts?
Well, thanks, Theo. And great comments by Michael and Dana. And the challenges that I see, again, our focus is on that bottom third of the pyramid. I would say that access is still a challenge. No matter what, we've got to do some KYC. We need to know who you are. You need documentation. You may actually need some funds in which to establish things. But access is also more than just a financial product. It's also, what job are you in? Is there a living wage? Is there benefits? Is there some type of health care that goes with that? And so access has a big component to not only financial services and financial wellness, but also wellness and at the whole of people. The next one is really convenience. And so if you can get access to it, is convenient. The bottom third of that pyramid work incredibly hard. Standard banker's hours of what we've known in the past just aren't even relevant anymore. It's got to be 24/7 on demand. There needs to be alternative ways to do them electronically, or you need access on a bus line. You just need to think of all sorts of ways that you can make it easier and more accessible. One thing that I think FinTech is doing particularly good, and what I would call the third challenge, is really the ease of use, the transparency around product. Do I understand how a product works? The easier it is, the more likely I'm going to feel trusted with it, and I'm going to use it repeatedly. And lastly, I would say, is price. And again, another great thing of where I see FinTech going is really, again, as Michael said, when you take the bricks and mortar and the human capital piece out of it, you can really reduce costs down, and you can really deliver a price that's more fair, more challenging to what the current structure is. So access, convenience, ease of use, and price are those challenges that we kind of think about every day. If I had to say financial wellness, if there was a definition to it, and this is just my organic kind of beating my head against the wall of failing pretty much all the time, is it's the ability to plan. In that kind of saying, there's, and it doesn't matter really what level of income, but in that bottom third, that ability to plan really talks about, you might be able to anticipate a shock. You might be able to plan for something, and particularly, I'll say, it says there's a bit of resilience in there, that you can overcome different fluctuations in income or expense or something that's unexpected. That ability to plan really kind of speaks to a higher level of where a person is, as opposed to just reactionary and being subject to kind of the whims of what the world is throwing them. So wellness, I'll say, is some type of resiliency.
I can't agree more. That is so important, especially given the extent of changes that we've all seen the last 2 years and more, and to be able to anticipate what comes at us, not knowing what it is, but being able to deal with it. I think it's super important. And I chuckled a little bit when you were talking about banker's hours, David, because I did not realize until last week my bank branch actually didn't open until 10 o'clock in the morning. And so there I was. I went there at 9 o'clock. I sat in the parking lot, looked. I'm like, wait a minute. I am grateful my hours are flexible, but what about the other people that actually need, right? That does not work. So let's stay with you for a moment, David. You mentioned the word fintech quite a bit, and I think it's a wonderful force for good. We've seen an explosion of different varieties of fintechs, if you will, in the recent years, trying to solve different problems and challenges. Immigrants, independent workers, musicians, LGBTQ communities, and those who are justice involved, to name a few. You have also written a book called Fintech for Good that highlights the power of fintech and the stories of those that are doing well while doing good. And for those of you who are listening, if you had not gotten a copy, I would strongly recommend you to do that. So walk us through a little bit about how Sunrise Banks are addressing the challenges of those communities that you're describing, right? And who are some of the partners that you work with? I'm really, really curious. You don't have to name names, or you can. And what keeps you up at night?
Oh, gotcha. Those good and the bad. Let's see. I mean, I think when it comes to fintech, what we're really looking for in our partnerships with other financial technology companies, and I'll rattle through a few in a second, is kind of the acid test is, do they want to be a hero to the same people that we want to be a hero to? So when we talk about the bottom third, and again, you described all sorts of various factors and facets of the and underbanked, the underserved, niche markets that are generally underserved in one way, shape, or form. If our values line up to serve those particular needs and make them better, give them better tools, then we're off to the races. That's a good partner for us. And those partners for us sound like Self. So Self has a credit builder loan. It's going to help you build your credit history or repair your credit history. It also has the ability to help you save for a particular event. Gusto happens to be, I believe, the fourth or fifth largest payroll company. We partner with them for a no-cost wage advance to an employee. So what does that do? That the couple $100 that they may be able to advance on a Wednesday to pay the rent keeps them out of a payday loan at that point in time. That ultimately has a tough recycle, as a high recycle rate and high fees associated with it. We partner with a company called Employee Loan Solutions. So again, in that employer channel, a no credit check loan. So how do you access a loan or credit or build your credit history when you don't have any to start with, or you don't have parents to co-sign or any collateral? Well, a no credit check loan through your employer is one great way to do that. Again, keeps you out of payday lending, allows some emergency cash, and it's responsibly structured so it gives you enough time to pay it off so your whole paycheck isn't getting sucked up. Lastly, I'll just mention like Remitly. Remitly is one of the largest remittance companies in the world. And so we're not in the remittance business, they are, but we offer a passbook checking account for their immigrant clients. So again, how to break the barriers, get access, and do it with a trusted brand of who you remit money with. And so just all sorts of different avenues like that in partnerships. There's no end to the type of partnerships that a bank and a fintech or a company that wants to do good for the same folks, we can figure something out. Wherever you need to move, store, or lend money, there's an opportunity to do good there. So to your question of what keeps me up at night, my anxiousness comes from not doing enough fast enough. It's like the world is moving so quickly. Fintech is moving so quickly. Tech is moving so quickly. I just feel the need to help people and get them engaged and bring them on a path of financial wellness and give them the tools that we just got to move faster. And as you might guess, in a bank, sometimes that's slow. At Sunrise, we really think of ourselves as an entrepreneurial company. And so we're constantly moving towards improving our speed in which to deliver to the market. But if there's one thing that is always seems to be an acid test for me is, can we go faster? Can we get more speed?
Thank you, David. We're not moving fast enough. I think that is something that a lot of us can resonate, because it feels like the world is going at 1,000 miles around us, and we're constantly trying to catch up, not just from an organization perspective, but also from just a human being perspective is overwhelming. And Dana, earlier you mentioned the word great resignation. I like to refer to the great exhaustion, at least personally. I just feel like it's overwhelming in a positive and negative way. And so, I think we might be is a good time to take a step back. Summer's coming up. It's like, okay, where are we going? What are we doing? What do we need? So with that, I think about the topic of, when we think about financial well-being, people talk about financial literacy. It almost feels like these two go hand in hand. And I remember reading a report that talked about how financially illiterate a lot of Americans are, and they have long ways to go before we can be even trusted to make informed decisions, whatever that means. I have mixed feelings about that because I have two young children, really young. I don't have to worry about them getting a mortgage or getting a credit card or any of that yet. But I do feel like it's not just about financial literacy. It's not just about education, because I don't think anyone actually chooses to be poor if they have the tools to do what they need to do. So I want to ask you, from your perspective, how do we help consumers go beyond the day-to-day, right, and start building wealth? Because I love what David's just talked about, helping them with tools, giving them tools to help them get out of situations where they might end up with payday loans, right? That's an important first step. How can we help them move beyond that even and build towards whatever aspirations that they have?
Yeah, absolutely. And I also have mixed feelings about that. And I do agree with the great exhaustion. It was, and I think we're still kind of in that space of getting out of it and really understanding what this time was and what it really means. But I do hate it when there's this assumption that the greater part of America, or even underrepresented or, underserved individuals, are truly financial illiterate. I don't think that's always the case. I do agree more on the point of what David, and I think the consensus on this panel will be, a lot of it is just access and opportunity, really having the access to tools, to financial services technology, to wealth tech technology, to all different types of technology that are popping up in the fintech space, and all that other banks and other institutions are also building in as well, to really ensure that we're going deeply into a lot of different communities that, yes, were traditionally probably ignored and underserved, but with access, with these tools, that continues to change, right? And it's not always about, hey, I don't know anything about finance, I have no clue about my tax situation, what an advisor does, what this person does. It's a bit of that, but it's also the fact that a lot of people haven't really seen a lot of others in the industry who either look like them or reflective of their backgrounds and understand culturally where they are, what they've come from, to kind of get to certain places within their lives. So when we're having these conversations and we're really able to make people feel comfortable about coming to the table and bringing their guard down, right? And that doesn't matter your socioeconomic status. I mean, I've worked with clients on various levels, and you make assumptions about people who have a lot of money and you think that they know everything, and that's not always the case either, right? And sometimes even, they need the access and the opportunity as well. But when we're able to bring a lot of that to other parties, individuals and small businesses is what we focus on within CHIP, and get them paired with professionals who can help them and who can sit them down and say, hey, I know, maybe you didn't have a great experience talking about this in the past, but let's make sure that we're here to do that now. How do we continue to champion on both sides of the table, championing for the professionals, and then also championing for individuals in who are looking to more develop their financial literacy as well. So it's about bringing both sides to the table, ensuring that there is more access, opportunity for more inclusive conversation. Because when I feel like I don't have to come to a meeting and read a bunch of books beforehand, or feel like someone is possibly going to stereotype me when I walk into the room, it's a large weight that comes off of someone's shoulders when they're just like, hey, I see you, and you can show up as you are and don't feel like you have to come in here suited and with all the things so that I can, come forth and talk to you about possibly opening some sort of account or talking to you about this tool. It's about how are we continuing to level the playing field on both ends, and seeing people and meeting them where they are and giving them the access. So I don't believe it's just that people don't know anything. I think it's more so, hey, how do we help you just do better with what we can give you access with, and provide those opportunities for learning so that it does go back. You were talking about your kids and not having that concern for them. Well, imagine if, everyone could have that, care and concern of not having to worry about them doing certain things because they have access to this information. So when their parents do better and know better, they're able to do that as well. And again, it doesn't always go through the lowest people who are in the worst, quote unquote, socioeconomic statuses. That kind of spans upwards throughout other people's lives and what they're doing, even if they're making six-figure salaries.
I had to laugh. It takes money to make money, right? So it doesn't.
Yeah, it does to some degree, right?
We forget that part. And so, Mike, from your vantage point, you literally sit smack in the middle of all of that with technology. You're in the epicenter, if you will. And so I'm curious to know from your perspective, what role do you think technology can play when it comes to delivering positive outcomes? Because it's one thing about, seeing there's a need, but also I feel like we don't dwell deep enough to understand the person in front of you as not just a number, right? Like what Dana say, I see you as a person, you with a human story behind you, you with special needs that might be different than the person next to you. And as an industry, we do so much generalization, right? This group is X, this group is X. Can we use tech to help with that?
So yes, as the tech geek on the call, I love this question. And I've chosen sort of 4 areas that I think have a lot of promise that we'll talk about today. First and foremost is the use of data. Now, the tech industry has made a lot of advances in our ability to analyze data and drive insights from that data. And that data will help to break through some of those perceptions that you all are discussing about, and the assumptions we make about our clients and their behavior. But I think more importantly, we're starting to put those insights into the hands of the clients and the bankers who serve them, who quite frankly need it more than just the bank's management. So much of my career was about making reports for managers, and I always thought, wouldn't this be interesting for the relationship manager or the client himself? Isn't it more interesting for them than the bank's executives? A simple example of what I mean by that is alerting, right? We think about all the alerts, the emails, the notifications you get on your smartphone. This is a simple example of putting insights and actionable data into your hands. And we're also making a lot of strides in data visualization. Humans, we are fundamentally visual creatures. So presenting information in easy to understand formats that drive you to take action is pretty essential. Next, I'm going to talk about the fact that people don't like filling out paperwork or the electronic equivalent of paperwork, which we call e-forms, right? So banks are starting to embrace this technology we call natural language processing. It allows you to engage your bank and your bankers in ways that are more natural, right? Through plain speech, through text, often through channels that have become far more widely adopted, chat windows, messaging apps, social media, smart devices of all kinds, smart speakers, smart cars, you name it. We like those channels, and we like talking and texting far more than pushing buttons and filling out paperwork. And we're starting to see banks move to these new channels and these new ways of processing inquiries and requests. The next one I'll talk about is what we call embedded finance, bringing the bank to where you need it the most, at the point of sale, maybe your workplace, maybe the website you're currently on at the moment, a retail website, a travel website, what have you. No longer is banking limited to the bank's own channels, their branches, their contact centers, their mobile apps. Banks have historically wanted you to come to them. Now they're coming to where you are and where you need them. So banking can literally be everywhere we need it to be. And we're using technologies called APIs, right? These interfaces that ease that integration of banking into other services and kind of providing that lubrication for whatever you're trying to do at the moment, such as purchase an item. And lastly, I'll talk about what we see the challenger fintechs, right? They're the ones who are really kind of changing the types of products and services that banks are bringing to the table. And the banks are, quite frankly, catching up. They're constructing solutions that actually solve real customer pain points. And I think it's no coincidence that the fintechs started targeting the underserved first as that niche way to break into the market. What they're doing is they're combining traditional payment, deposit, and lending products into one. So let me give you a couple of examples. Obviously, we're all becoming familiar with point of sale financing solutions like buy now, pay later. We're all learning about early pay, sometimes called early wage access. Why can't I get paid for that hours or that days or that week's worth of work now and not wait until the end of the month. Better tools to deal with non-sufficient fund scenarios. We like to think of this as overdraft, but the tools to help you manage that are expanding quite rapidly. All kinds of automated savings and investing that don't require huge sums of money. So a lot of us are familiar with these sort of roundup or keep the change programs. And then lastly, the credit builders that David started talking about. How can I build or rebuild a credit score, and how can a bank help me to do that with these secured lines of credit? So I think that's kind of where we see technology, at least in the short to medium term, really starting to change the game.
And those are very essential too, especially given where we are right now with multiple stresses, if you will. But with challenges comes opportunities, right? So I have one question for all of you. Do you think we have gotten to or achieved what we have set out to do as an industry in terms of helping people become more financially healthy? It's something I think about a lot, especially given a lot of the various payment methods, shall we say, that are available to consumers, right? Make it so easy to buy something, make it so easy to get credit. I feel like sometimes we are actually shooting ourselves in the foot. Now, deployed properly, of course, technology can do all kinds of wonders, Mike, just like what you said. So just objectively speaking, if we can, what more should we be doing? Mike, let's stay with you.
Sure. Well, I think first and foremost, financial health and wellness needs to go hand in hand with financial inclusion. We need to bring in more of the underbanked, underserved segments into the system because it does have that network effect. There's no point in making alternative systems for the underbanked and underserved. I think one of the trends again, the challenger fintechs are sort of leading the way, is to see how the industry has changed what we mean by community banking. So community banking used to mean customers that are geographically around my physical branch network, right? Often these small community banks may only have one branch in a small town, to more of what I call affinity groups, right? And often these affinities, again, because we're starting with the underserved, underbanks, this often translates to women, minorities, immigrants, underserved segments of all types. You named a number of those earlier, Theodora. And I think that these folks can be serviced digitally, remotely, and in a cost-effective way nationwide, not just in the town where the bank branch is. And then also these groups are starting to help clients feel more comfortable coming into the bank. I'm actually an ex-banker myself, and we often struggled with getting some of these communities to even walk in the door, even though we launched all kinds of products and services aimed at them. They just felt, well, that bank is too posh or too fancy. I'm not going to even walk in that door. That's not for me. So I think these affinities are now changing that mindset and allowing these people to feel like, yes, I too can enter the banking system. So change and progress can be hard and slow and feel frustrating over our careers, but I truly feel we're moving in the right direction. But no, we haven't reached where we need to ultimately reach.
Thank you, Mike and Dana. Do you share Mike's thoughts?
Yeah, absolutely. I agree with Mike. I think we're getting there, but we're definitely not all the way there, or even sometimes really halfway there. There's still a lot of work that we have to do, just as an industry, right? To Mike's point of making people feel welcome, that's like half the battle of saying, hey, this industry is for you too. And that's such a powerful thing to make sure that people feel included, they feel seen. They're not looked at as numbers, as charts. We're reminding people to be empathetic and say these are, human beings, right? We kind of have to get back to the smaller notions of how we view just everyone that we're working with and that we're talking to. But I do see this shift and change, especially when it comes to professionals in the industry and the way that they're building out their practices, right? A lot of it used to be centric around, AUM and the amount that you had there and that assets under management that you were focused on, such these like large accounts, right? And a lot of people are shifting from that type of mindset into more planning with purpose and intention, and changing around their models to more subscription based so that everyone has an easier way of getting in and starting that financial planning process. So it's not like, hey, I have to wait until I've saved up enough money and now I can get to the next step. It's like, no, you can actually do that step now, right? People can actually meet you where you are, whether it's coaching to get you there combined with financial planning, and of course you taking that next step towards action. But we do have to kind of start there, and we do have a long way to go. But I think, again, it goes back to all of us continuing to sit on the same side when it comes to access, opportunity, and intentionality around everything that we put into this industry. And then also education, right? So we're talking a lot about the technology that's going out, which is great. But if you don't necessarily understand, it can also sometimes be a little harsh to you as well, right? So we want to ensure that, hey, if you're using this tool, this is why it makes sense for you. And you're not necessarily just using it because someone told you it's the best thing on the market, right? Really enhancing that with a bit of education so that we're all coming out and we're achieving the goals that we want collectively and individually.
You said my favorite word, intention, Dana. That's my favorite word. So David, what do you think?
Well, there's consensus here, Theo, in terms of we're making progress. I have a saying that there's no crazy goals, just crazy deadlines. And so we're on a journey, and I think it is really important to kind of understand the anxiety of we want to do things as quickly as we can. I think we have to look back and look at the progress that we've made, because we have made a lot of progress in a short period of time, relatively speaking. And I think it's important, in the bankers and credit union folks on the line will probably understand this, is that we not only have to reinvent new stuff, but we got to break the existing stuff. I mean, we have systemic issues and policies and procedures in place that are going to need change. And so we're going to have to break through those barriers ourselves as an institution. But I think we are making progress. We're breaking barriers to access. Fintech does an amazing job of making things more convenient, more accessible to people. And also, Fintech does a great thing that I have just longed for, and that is better design. Like, a checking account is just a checking account. I'm like, oh my gosh, it's been the same for 50 years. Can't we change it? Can't we make it more exciting? Can't we make it accessible and so forth? And I would say on the price side, we're really calling out the abusers on the price war, and we're making things that are better and faster and cheaper. And so the predators in this space really have to now compete with us. And so that's the way I see it, is like, we're now the challenger and we're making better stuff happen. They're going to have to change, or else they're going to be out of business. And that's the hustle I like, because we're coming at it from an offense as opposed to always playing defense. So yeah, we're making progress. Are we there yet? No, but I think it's a lifelong challenge to continue to find things that are better for people. There will always be a need for better financial services and better access and convenience for folks. But hey, that's the fun, that's the challenge, and that's where we really need to, I think, bring out the empathy where we go to be able to deliver on that promise.
It's a marathon, not a sprint. And I can always count on you to end with a positive note. Thank you, David. But now, before we go, I did always promise that we always have a surprise question in the end. I do that with every single panel that I have, because it's fun. Why not? So it's easy, I promise. Earlier, before we started our session, we had a little bit of a breakfast chronicles. We talked about what we all ate. Confession, I had 3 cups of coffee, working on my 4th one. Now, if we were to use a food, a drink, edible, to describe the array of products that we have out there helping people with their finances, what would that one thing be? And I'll give you guys 5 seconds to think about it. My choice would have been artichoke. It's amazing, it's wonderful, it's good for you, but it's a pain to actually get to what you need to eat. And that's how I feel like with a lot of the stuff out there. Eventually, I think we will get to somewhere that I'll have something, it works. But right now, the other day I was sitting down looking at how many accounts I have to manage all of the different aspects of my financial life. I think I lost count after 12. I actually don't even know how people can manage all of that. Thinking about money is already hard enough, right, Dana, like you said. So 5 seconds up. Dana, what do you think?
That's such a fun question. I'm sitting here like, ooh, what would it be? So what came to me was an avocado. I think, there's that hard shell of the avocado, which kind of is reflective of the history of the financial industry, so to speak. But once you kind of cut into that, it's soft, right? Once you kind of figure out, and also, some people have trouble cutting properly the avocado, right? But once you learn that, you can get all of the softness out of it, and then you can add to it, right? The spices, the fruit, everything that kind of makes it amazing, which is this kind of combination of the inclusiveness that kind of goes into making, which is my favorite, guac, right? So once you kind of put all that together, I would say that's the perfect combination for what I think we all want to have within this industry.
I like that. Not just because I love avocado, but I love the analogy. Michael, what do you think?
I think we're thinking quite similarly. I was going to choose a pineapple for some of the same reasons, right? It's a bit kind of scary and off-putting to look at it. It's got this difficult sort of cover to break through. But once you get inside, you can have this sweet thing, and it's not only a reward in and of itself, but we use it in so many other dishes, right? To make the ham dish, or to liven up a lot of Asian food, right? To add that sweetness to the spicy or savoriness. So very similar analogy to that avocado, right? We gotta figure out a way to break it open and use it to flavor the rest of our lives.
I like that. And last but not least, David, what about you?
Yeah, I'm going to totally riff off the both of you, particularly Dana, in regards to what she actually had for breakfast this morning, which she confessed she had a mango. And so mango is my absolute favorite fruit. But I live in Minnesota, so the accessibility to getting a mango is like few and far between. So it's usually I got to travel a very long distance to taste the sweetness of a mango, and it's so awesome. And usually the environment around me is awesome too, because it's warm and tropical, and usually I'm finding a surfboard and a beach somewhere. And so there's just so much around the healthiness that goes with the mango in my life that I use that as kind of the metaphor to say, gosh, I think it is difficult, like, breaking through the skin of various things and getting to the core. And the core is always challenging in and of itself, but there's some sweetness and variety in that. And obviously you can use it in many different ways. But I just think of it as a healthy space to be in. And so mango is my choice of fruit today, breakfast.
I was going to say, as long as we know it's safe, when we all do get together, of what we are going to be having for our appetizer dishes.
Exactly. Mango
Well,
salsa.
So not only do we have a wonderful session talking about finances with an amazing panel of financial experts, I feel like we also have a panel of culinary experts. So this is like Master Chef meets Fintech Talents North America. So anyway, thank you so much for joining us today. And for the rest of you, thank you for tuning in for Fintech Talents North America, and I hope you enjoy the rest of the day.